Yo, yo, what's going on, Tony? Cali, stand up. Where y'all from? What's up, bro? How y'all doing? What's up, LB? Good afternoon. Good afternoon, Adam. It's kind of gloomy outside here in Houston, North Carolina. We in here. That's kind of. Oh, you seen that? Appreciate it, man. Good morning, people. Y'all shout out where y'all from while we waiting for my man Chris to get in here. Somebody shoot him a DM. Fredericksburg. Cash flow is king. Oh, you see that? Tampa. Good morning, good morning, good morning. NYC, Philly, Screwston, Houston, Texas, stand up. What's going on, Chris?
What's going on, brother? What's going on?
Good morning, man. Good morning.
Good morning.
What is looking like over there on your side?
Everything's good, bro. Everything's good. This little chilly weather.
You getting out today?
Man, a little bit, only because I got a lot of landscaping work and some other repairs going on at that crowdfunding project.
Okay,
So they still
cool.
working, man. So I'm working,
They
keeping my
still
6 feet of separation, but
they still
you know,
work? Yeah,
yeah.
yeah. I noticed that contractors still putting stuff up.
Uh-huh.
Byron got a little project. We've been going over there. They've been flying like ain't nothing happened. They want to keep it going.
Yeah, bro.
Anything
They
that's
do.
slow with the permits?
Mm. Permits a little bit, like the inspections a little bit slower. But everything's going pretty well right now. I mean, they had already switched it over to a completely digital system for submitting permits,
Okay,
so that kind of timed itself pretty well.
cool.
Um, yeah, I mean, it's just that you can't go up there and ask for favors or anything right now. You know what I mean? So if something get caught up, it's just caught up.
I dig it.
Yeah,
Man, can you
yeah,
introduce yourself for my audience? I'm pretty sure, we here in the same city, different
yeah.
different definitely different, I guess, primary focuses,
Uh-huh.
as far as in real estate. So it might be some cross pollination here. So introduce who
Yeah.
you are, and I'll do the same, after you.
Cool. All right. So I'm Chris Senegal, guys. I am 36. I was born in Lake Charles. Lived half my time there, half my time in Port Arthur, Texas, which is right next to Beaumont, where Brian's from. Where Brian's known to be from. um, yeah. So went to college for engineering. Did it for a year. Hated the corporate life. Got into real estate. So I've been in real estate since 2008. I started flipping houses back then. And since then, I just always been trying to scale up to bigger and better things in real estate. And so now I do real estate development. I do some creative financing too on some bigger deals where I just kept hitting my head against the wall trying to get funding for. So I just figured out some creative strategies to close those deals. I just bought a big portfolio of rental properties using some crowdfunding and some other seller financing and private money. So, but my main goal is just to help everybody else get to where I am. People that are in that position I was in, where I couldn't figure it out, and like it was nobody wanted to give you the game back then, and we didn't have the power of social media.
Right.
I just like to leverage my platform as much as possible to put other people in a position to win.
Got you, man. Nice intro. Man, Chris, a real humble cat. He does a lot more than that. Does a lot more than that as far as influence and impact. And just kind of trying to change the culture. So, myself, but anybody that doesn't know me on this live, my name is Brian Iregbu. I'm 35. Kind of grew up all over the place, Texas, Baltimore. Both. I actually was a high school teacher. I actually also went to college. I got suckered. Got a 4-year degree in biology, minor in chemistry. I was a high school teacher for 4 years. That was very stressful. You know, they're really highly, hard work and underpaid. I decided, man, I want to make some more money. Originally, I was trying to go to dental school. I was like, no, that's not a fit. Let's do the oil and gas. So I got a 6-figure job working for ExxonMobil, the #2 company in the world. Did that for about 6 years. Started to invest in real estate back in 2014. So right now it's about 6 years. And slowly but surely, I replaced my full-time income with creative finance realms, subject twos, owner finance, wraparound mortgages. And when, I received enough passive income from that, I let the wife retire her job. 2 years later, I retired mine, partnered up with my partner, Byron. We also added a wholesale company that, February was our first month to start bringing over 100,000. We have 9 full-time W-2 employees. And just learning and growing, man. Just learning and growing. So that's
clap. That's what's up, bro. I remember when you talk about leaving Exxon, man, and to see it grow so much,
bro,
quick,
that's a cake.
That's
gig,
crazy.
Man.
People
think you crazy leave that.
Yeah, bro. Yeah. But it all paid off. Yeah.
But that's our intros. What we wanted to bring for you guys today on this call is talk about how long you been in the game, Chris?
13 years.
13 years.
Mm-hmm.
So based on his 13 years, so forget my math. Were you around during the last recession?
Yeah, 2008 is when I started in the last recession.
I wasn't. I'm wet behind the ears.
Mm-hmm.
I came in the game in 2014, 6 years in.
Mm-hmm.
Based on Chris's 13 years of experience and what he's seen, and based on my experience and the type of deals and transactions we've done, we're gonna basically share with you guys what we actually noticed as far as the changing market, the shifting market. Actually being in it and not just watching TV, right?
Mm-hmm.
Actually, actively doing deals. What we're noticing in our business, one of the big things is dealing with sellers, because with every adversity, there's an equal seed of opportunity, but it doesn't mean that you should develop shark, predatory-like behavior.
Mm-hmm.
So that's originally why me and Chris wanted to do this live. It's like, this is not the time to, let me steal houses from old ladies. That's not what this is, right?
Right.
This is to help, to empower, and create win-win relationships when they can't get help anywhere else, right? Mm-hmm. And also recognizing opportunities, because with all of this, I refuse to agree that there's a lack of opportunity and abundance. It's not there. So I think it's one of those things we got to switch our lens and perspective.
Mm-hmm.
So
100%.
Talk to me, Chris. Talk to me on market shifts, man. I know that right now it's 22 million have filed for unemployment. We know that the QM mortgages kind of like the non-QM mortgages kind of like wiped out. Those programs that help people with lower scores and standard. And also some of the banks are having more rigid guidelines, with the credit scores.
Right. Yeah. Mm-hmm.
So what do you notice happening in real estate, man?
Man, this is very representative of what I saw in 2008. Even though it's a different trigger for the recession, it's going to have a very similar type fallout. And what I'm seeing right now is reminding me exactly what happened then. Right now, you got a lot of people that can't make mortgage payments. There's a temporary moratorium, and a lot of them don't realize that when they call that bank and they ask for that deferment, that most of those banks aren't going to just roll that onto the back end of the loan. They're going to want that stuff to be caught up by the end of the year. So what I'm thinking is by fourth quarter is when we're really going to see that inventory pile up, because you have the time after the moratorium, you got the grace period the banks are going to give them to catch up. And then they're going to start the foreclosure process on the people that can't catch up. So that's when you're going to start seeing a lot of stuff hit the books. Some of the people that are going to want to be proactive may start the process of trying to exit out because they're conscious of what's going to happen to their credit and all that kind of stuff. So they may be looking to get ready to get out before then. But anybody that's thinking it's about to happen today or tomorrow, you're gonna be disappointed. So this is time to be patient. And I don't see any signs of anything different coming about. Also, what I see is there's two other groups that a lot of people aren't really talking about that are going to be a good source of deals for everybody. Number one, my very first deal that I bought in 2008 was from Homevestors, believe it or not. But
What?
yeah, so home investors, before everybody knew what wholesaling was, that's what home investors was doing. They were we buy ugly houses. That's always been their mantra.
Right.
But the guys that have the office off of OST right by U of H,
Right.
um, they also had a hard money lending business, but they had a line of credit from the bank of about $50 million, and
Okay.
that's what they were using to buy all their properties with. Well, when the recession hit, the bank cut their line of credit. But what happened was they had already bought a whole bunch of houses in inventory that they had not rehabbed, right? So they were like in a really bad position, man. So they were trying to wholesale enough just to break even. And some of the houses that they just knew the rehab was going to be too expensive and they didn't have the cash in the bank, they just started trying to liquidate them. So get this, Brian. For me to buy that first house from them, they had to bring 7,000 to closing.
Hey,
Right.
hey, but hey,
They just
that's
wanted to get it off their
motivated
books.
seller, right?
Yeah, that's a motivated seller. They just
Shit.
wanted to get it off their books, bro. They just wanted to get it off their books because they had so much inventory and they were trying to keep them going bankrupt. But yeah, so talking to investors or landlords that were holding a bunch of future inventory that they were planning to flip later or rehab later, that's going to be a good source. Where now those type of people, they're investors, they're in business. So if you want to go for the gut on them, go for the gut on those guys. You know what I mean?
Yeah.
Because it comes to the nature of business, but not the person that you're trying to get their primary residence from them, or they're about to lose their primary residence. You got those, and you got the investors that have a big rental portfolio, the ones that did too much of that buy, rehab,
Bird, that
refinance,
bird, yeah.
that bird method, yeah,
It
because
sounds cute. It's a
hmm
tool and it's used when it should be used.
hmm
But just like anything, you can't do all.
yeah,
You got to be
yeah,
balanced because you can be
right,
super over
yeah,
leveraged. I mean, it
yeah,
feels good
yeah,
when you can have some paid off, man.
yeah, yeah. Because what's gonna happen to those folks are the ones that did a whole lot of that. If those tenants aren't paying right now and they can't evict them, they're pulling those payments. They're running through all their savings, burning through everything, trying to keep those mortgage payments up.
Exactly.
And so in a couple months, when it's time for them to catch all that up, they won't be able to catch all that up, and they're gonna have to cut ties with a bunch of their properties to avoid, being taken under.
Right.
So I say all that first to let everybody know that we're not telling y'all there aren't going to be good deals out here that you can get really good. We're just making sure that you have good integrity and don't take advantage of the people that are losing their primary residence.
All right. So speaking of,
Mm-hmm.
because you touched on the topic twice,
Mm-hmm.
um, about the moratorium, right?
Mm-hmm.
And I think this is the time where we should dig a little deeper on that
Mm-hmm.
because some of the people that's watching us, we got a little over 200 people on this live right now,
Mm-hmm.
have mortgages, they have
Right.
properties, and
Mm-hmm.
we salute you guys for that, for being owners and taking ownership. But we want you guys to also, because we went past it a few times,
Mm-hmm.
to catch what we're saying about the moratorium, because
Mm-hmm.
it's a lot of bad advice out there. It's like,
Mm-hmm.
oh, Trump, said we don't have to pay our mortgages. And I think that was just kind of
Mm-hmm.
like a quick, I don't know if they knew the impact on the community
Mm-hmm.
to communicate it like it was.
Mm-hmm.
So a moratorium, all right, what's the definition of a moratorium, basically, or paraphrase, what a
Yeah,
moratorium
to put it in layman's terms, it's just a pause. It's just saying at this point, nothing else, no further action can be taken, and no further collection processes can be pursued
Okay,
temporarily. Yeah.
perfect. So you guys understand what a moratorium is. Here's the next thing. Because it's paused and it's a temporary suspension of payments, and there's not any type of, I guess, consequences for not paying right now, everything that was due is still due. It's not the same as a loan modification. So before you just say, oh, I'm not going to pay my payments and then I'm just going to pick up with my regular payments in 3 months, it does not work like that. You want to get clarification from the lender exactly how their program works. Because when a loan is originated and you sign off on those documents, that full amortization schedule is set in place. So they can't just take those payments for the last 4 months and just throw them somewhere, right?
Right.
Usually the loan has to be restructured.
Mm-hmm.
So what happens is, let's say you got $1,000 mortgage payment you don't pay right now, right? And it's like, oh, 3 months, they're not making me pay any money, and they're not calling me and saying it's late, and I'm not having any late fees. Cool. Well, in 3 months, now when the moratorium is lifted, you owe $3,000. And
Exactly.
so if you don't have that $3,000 because the money that you were still getting, you were spending it, that's an irresponsible move. So I would advise, if you have the money, make your payments. All right.
Agreed.
Yeah,
Agreed.
don't take
Agreed.
that money and be like, oh, this is free money now. I can spend it because I don't
No.
have to pay my mortgage. I promise
No.
it's going to be bad because you'll be in a position where you have to make the lump sum and you're going to be at a crossroads. If you
Mm-hmm.
don't have it, you're going to have to try to get a loan modification,
Mm-hmm.
right? Or some type, yeah, it's going to be a loan modification to come up with the money. Or you're going to
Yeah.
start to be delinquent.
Yeah, and like the bad thing about those loan modifications is a lot of those banks still require you to be 60 or 90 days behind to even make that modification.
Right.
So you're still gonna ruin your credit. But yeah, you're right, man. So one of my friends built a house in Pearland that was like a $350,000 house, and just out of curiosity, she called the bank and she was like, if I take the forbearance, what does that mean? They were like, well, for the next 3 months, you don't have to make a payment, but on month 4, you're gonna have to make all 4 payments. So yeah,
And
people think it's yeah.
what's the common thing that happens when someone has the money, right? And they don't do what they need to do with it. What happens to money you don't put to use?
You do something else with it you shouldn't be doing with it.
It goes away.
Yeah.
Yeah, so that's just a side little nugget. So we talked about the shift in markets. Let's talk about recognizing opportunities in this time right now. So the market's shifting, is getting rigid for the requirements and everything. You kind of explained in 3 different buckets that we'll find deals from. What are some more opportunities that you see?
The opportunity to do some of the things that you teach strategically, like a lot of subject to type deals will come about. If you are positioned correctly and you have the cash sitting on the sideline, you can prevent someone else from losing the property. And I would say for the majority of people right now, if you don't want to blow through a lot of money in marketing, because we don't know exactly when the switch is gonna flip, where all the deals are gonna start rolling in. You start with your warm market at least. I mean, everybody knows somebody in this economy that's lost a job and is losing a house, so you can start prepping them for the repositioning of, hey, I can take over those payments for you, and help you transition. Then I think that's a great source to look. Word of mouth, realtors, all that kind of stuff. Anything that's been sitting on the market for a long time. If you got realtors that can pull stuff, or if you can pull it, look at that high day on market stuff. Look at that Zillow stuff, that for sale by owner stuff. Lots of sources there for deals. And I would say make sure that you understand the criteria has to change too. You want to make sure anything you pick up right now, you have multiple exit strategies, meaning it don't plan on flipping a whole lot right now. That's definitely not the market for that.
What's the danger? And I sat on my hands forever. I've been watching this real estate thing forever, and I haven't had the courage. You know what? Now I got the courage. Hey, baby, let's go flip some houses. Why would you say that this isn't the time?
This is not the time for that, because there's going to be a lot of people that are anxious about what's going to happen in the market. And the people that are best positioned to continue flipping are the ones that have been in the business, and they have the capacity to hold some properties if they don't sell right away. So you got, you got
exit strategies, right?
Multiple exit strategies. I mean, you have some people that are still ready to flip. They have flips in the pipeline. They're just waiting on, till everything clears up. So imagine all of this new inventory of flipped houses hitting the market at the same time, and you trying to do your first flip in the middle of that. Well, these guys got the ability. Exactly, of somebody, and of course, it's going to be harder to find lenders right now. A lot of the hard money lenders aren't even lending. So
we didn't talk about if the possible values drop, right? You calculate into this flip. Oh, I'm gonna put this much in the rehab. This is the holding cost. This is my realtor commission on the back end, and I'm supposed to make 120.
Yeah.
We didn't talk about the potential for, let's say, in the next 8 months for that same property that you want to sell for 120 to only be able to sell for 90.
Right. Right. And people wonder how that happens. It's exactly the same group of people that I was just talking about. They may just want to break even at some point, and maybe they're all in it for 90 because they bought it at a really good deal before this stuff started. So they can sell for 90 and be okay, but then that's going to put you upside down, because as they sell for less to get stuff off their books so they can break even, now you're going to be in the negative.
Got you. So good gems right there. So let's kind of shift, one more quick topic, then we're going to answer it for Q&A so we can see, what everybody else needs help with. But the last topic, which was, really kind of the foundation, and I know a topic that's dear to you is dealing with homeowners right now. Talk about this specifically. Like what aren't you okay with? What are you wanting to see people do and not do as far as dealing with the actual sellers, motivated sellers, and such right now?
Man, okay, for me, it's like number one, we're problem solvers, right? We're supposed to be in this to help people, period, and that's what we tout. So when you're talking to a homeowner and you realize this is all they have left, this was, of course, number one, a house is usually any average civilian's biggest investment they've ever made, right? So when you realize that they're in a position where they're literally about to lose this, and they're about to hit reset on their life, you got to think about what's practical and how can you make it a win-win. Of course, you're in business to make money. You're not in the business to be a charity. At the same time, you don't want to completely take advantage of people. Where let's say there's a $20,000-$30,000 spread on the house, and this senior is in the situation because her kids can't help her, which means they're not in a financial position to help her after she sells the house. Are you going to take all 30,000? Or are you going to try to give her something, give her maybe 10, 15, where she has enough time to reposition herself to be comfortable, and be happy that you had a base hit, you did something good,
Right.
And that that karma is going to pay dividends. Exactly.
You're gonna make another deal and another deal.
Exactly.
That's probably all.
Exactly.
All she got. I mean, for
that
the average
is
person to save $10,000, it takes years.
Yes. Definitely. I mean, I agree. And if you can help them, move on to that next step, some type of way, whatever you can do to help. Some people, they just don't care. They'll wholesale the house, somebody else not help the person at all, and then these investors come in and they're savages too. And then you ruin somebody's life when it was easy for you to give them. I mean, that's 20, 30, whatever it is, even if it's 2 or 3, whatever it is you can give them, that's something that they wouldn't have otherwise,
Absolutely.
Yeah, man.
Okay, cool. So, man, Chris, in that little short powwow, man, I think you dropped so much value, man. I appreciate the quick live on a Saturday morning, little in and out. Let's see if you guys got any questions. Y'all go ahead and start dropping them. If you had any questions before, start fresh, because it's really hard to kind of go back. And look out for them, Chris. Thank people first, definitely. I love people who show honor and integrity. Super dope as well.
Let's see. So I see a question about just refinancing. Yeah, it's definitely a good time to refinance. Catch it while the interest rates are low. I don't see any negative sides for you to refinancing right now, because banks want to hold on to all of the performing assets. I mean, people that actually paying their loans, they're going to work with all of y'all because they know there's going to be a slaughter with a bunch of foreclosures. So,
do you think notes are going to are going to pop back up? Non-performing, I'm pretty sure, people always want to get rid of those.
Mm-hmm. Yeah, non-performing notes, and then their note buyers will come back around. People that buy notes, they'll be back in the game pretty soon here once they figure out which markets took a big hit, where the values are still equitable, and they have good returns on those paper assets. I think you'll be able to sell them for a while. In a while, it might not be right now though.
Alcito, Brian, are you seeing any shift? Brian, are you seeing any shift with your tenants paying rent? Fortunately, I've been blessed. I only have one tenant right now is not paying, and they weren't paying even before Corona. The attorney put the notice on, and basically that was right when they started saying, like we can't. The judge wasn't seeing any cases. So if we're going by that, I have all my tenants paying right now. So we'll see what happens May.
Yeah.
But that's why I love structuring the deals like I do, creative finance, because I always teach all of my students to structure a deal in a certain way where you can upfront, you can retain ownership through like a lease option, but you get like 5% down. So in the event somebody doesn't pay for 4 months, you could just use that option, some down payment or reserves for something like that.
Yeah, and let me jump on that too. So with the portfolio of rooms I just bought, the 18 houses. I went and I established a good rapport with those people with the tenants before I closed, and let them know, my goal is to secure their position in the community. I'm not trying to go in there and raise rents and displace them. And man, they responded so positively to that the only two that did not pay their rent out of the 18 were the two that actually lost their jobs, and I'm working with them to make those payments up. But even in that, I did use a creative deal structure for that, because the sellers were originally going to take like 20% down and wanted me to make mortgage payments, and then I offered them an alternative where I gave them 50% down, but no payments for 2 years. So it's a balloon in 2 years on the thing. So right now I don't have to make any mortgage payments. So this is not negatively affecting me at all. So even if none of the tenants would have paid, my position still would have been secured with that investment.
I like that. As an investor, using balloon payments to your advantage, because as far as us, like residential selling on balloons, it's a lot of guidelines for that, but we could have a balloon for ourselves.
Yeah. Long as it's not your primary residence, But that I think it's really illegal in Texas to do a balloon on a primary.
Yeah, so that's Jedi right there.
Right.
So, let's see. Once the ban is lifted, they'll have 3 months to catch up on payments, or will it be due instantly? It depends on the lender. A lot of times it'll be due instantly, and then you'll have a certain period of time before it's like delinquent.
Now, what's going to be interesting is the ones that were already on the docket for foreclosure. Like if they were going to go to sale in March or April.
That is interesting, because that's a lot of inventory across the whole country.
Yeah. So I don't know if the courts are going to accelerate that process, or they're going to reset that clock for those people. It's going to be interesting to see how that pans out.
Because that's going to be a big. That's going to hit hard, like
it will.
Economy.
It will.
A lot of defaulted mortgages.
Yeah.
What would be your advice to get started for someone new in this market? What you think, Chris?
I don't like that question because
that's why I gave it to you.
I was about to say it's all about risk tolerance and what your position is. Do you have cash? Do you not have cash? Do you have time to learn? Do you have the dexterity to deal with people telling you no all day? Do you just have some money that you want to give to a seasoned investor to put money in? I think the best advice is always research. And I mean, you're following two people right here that give away a lot of game. YouTube is your friend. Go out and learn, just research different techniques, and then figure out which ones you think you like, and then go from there. The best answer is don't rush to make any decision.
There's a question that's a close relative to that I get a lot, and I know you get a lot, and it's always one of the hardest questions. I would rather you ask me something about something technical, right? Because how do I get started in real estate? Oh my God, that's tougher than any other question, because I don't know. Somebody will say wholesaling, but that's an opinion. I know people that are multi-millionaires through real estate investments. They never wholesaled a single deal in their life. Let's say you got a nice job, great credit, a lot of money saved. I would say leverage that to go buy you a multifamily or something like that, or buy you a houses. I mean, everybody, like Chris said, it depends. You might not have time to run around marketing, talking to sellers, and wholesaling might not be a fit for you, and you might not want to fix and flip. You might, is there a problem? Is there a problem, Chris, for someone if they got the right education to start with development?
No, it's not. It's not. I tell everybody, to be successful at anything you do, you need three things. You need the knowledge, you need the money, and you need the opportunity. So if you come to the table with at least one, and you anchor your position, and you bring the other two to the table from somewhere, then everything can be a go. There's somebody that got a settlement. There's somebody that's a doctor or a lawyer that's got money to the bank. If they have enough money to carry a development project to the point to where construction can start, then you can hire an architect, you can hire a contractor, and you can have a realtor, somebody find the land for you, a wholesaler bring you a land deal. So it's definitely possible. You just have to make sure whoever brings the knowledge really has the experience and has actually done what you're trying to do.
Right. So I think the answer to that one is research. Really dig deep and find out what it is you want. Because even like with the realtor thing, somebody says, should I get a realtor license? How do I get into real estate? Then they be like, should I get a real estate license? I don't know. That may be the best fit. That may not be the best fit, because that is two different directions normally in the beginning.
Yeah. So check this out. So I know millionaires that own appraisal companies, real estate inspection companies. I know millionaires from owning rental property, from flipping, from wholesaling. you know, you just got to pick your lane. There's a
It's all
million,
real estate too.
and especially real estate brokers, yeah, that have their own branches. Even some just realtors that handle bigger projects. I mean, bigger houses. You know, higher in inventory. They're millionaires. So it really depends on what you want to do.
Oh, this is a good question. Is now a good time to buy a personal home, and what's a good credit score to buy? Oh man, that seems so dependent on the person in the situation.
And the market,
tough.
and the market they're in, definitely.
Yeah, and the market you're in, because
Mm-hmm.
if, all right, correct me if I'm wrong, Chris. I mean, so we do have great, you know, there is a lot of still great interest, you know, interest rates and products for people that's looking to buy their primary residence and everything.
Mm-hmm.
But if you're at the top of the market and in 8 months your home loses value, maybe you could have bought it 8 months later where it was cheaper, but we don't know. It's all speculation. None of us know. None of us know for sure. That's a really good question. What do you think, Chris?
I would say, yeah, I would say that if you're gonna hedge a bet, which means if you're gonna try to make a safe bet, I would say use the rest of this year to save money and maybe wait till November, December to find a house. The reason why, even in a good market economy, sales always drop off in November and December. And people that own real estate or in the business of real estate, at the end of the year, always want to make sure that they get enough stuff off of their books to balance their to minimize their taxes, basically. So you're going to have that normal group of people at the end of the year that maybe even builders that have extra inventory on development sites. They're going to want to get stuff off. So they'll be more apt to lower prices on top of everything happening with the foreclosures and stuff. Some of them will have started rolling in by then. So I think if you can wait till the end of the year to buy a house, as long as your market isn't tanking, and you know the realtors and the brokers in your area that you have working with, especially if you're new, guys. If you are a buyer, there's no reason for you not to use a realtor, because a realtor for you is free.
It's free.
So just find somebody that knows the neighborhood that you're you know, ask them simple questions, like what's the average home price, how long are they staying on the market, you know, which areas are up and coming. If they can't answer those questions for you for the neighborhood you want to move into, then I would just find another realtor.
Yeah.
But
I heard it's free for a buyer to
mm-hmm.
use a realtor. 6% comes
Yeah.
off the seller's side.
Off the seller side, yeah. So so just make sure that you know, you have that on your team, and make sure that whoever you're dealing with can tell you this market is stable, you know, it's flat, or you know, it's not going, it doesn't look like it's about to crash and burn. You don't want to buy over there.
Someone asked, have FHA guidelines changed? I don't know. I think we got a great realtor that was on here. I don't know if she's still on here, Portia. So if she knows, she could drop it in the comments. But I haven't been keeping up with FHA guidelines.
Yeah, me neither.
Let's see. How do you get a contract signed without seeing sellers or buyers in person? DocuSign and getting the sellers to work with you. So let's say if you need pictures, you can simply just tell the seller, hey, you know, can you give me pictures of this, that. All right. You can also have them, you know, pull out their phone and guide you through a video type of tour through the house, or you can outsource it. There's third-party companies like WeGoLook.com that will send someone out to the properties and take pictures for you. And as far as the documents, DocuSign, it's a game changer. It's very easy, DocuSign. Wraparound mortgage. What is a wraparound mortgage? A wraparound mortgage is a form of seller financing. It's when you have an existing mortgage on the property and you create another mortgage, all right, on the property that encompasses the first mortgage. So for instance, you owe $100,000 on a house and you still owe Wells Fargo $100,000 for that property. You can still turn around, even though you don't own it free and clear, you can still sell it on owner financing for, let's say, $120,000, you know, at a certain percent interest rate and term. Of course, the first lien holder, which is the Wells Fargo, they still have the right to foreclose if, you know, those payments aren't made. The due on sale clause is still triggered, but that's a whole nother thing. But wrap-on mortgage is a form of seller financing where another mortgage is created to encompass the first. If closing on a house, should you redo the deal, Chris? If you
I
close
mean,
on a house.
hey, if you have the opportunity to go back and renegotiate with them, and they're scared that if you walk away that they won't get another buyer, it's definitely worth a shot. I mean, all they can do is tell you no. You know.
Is wholesaling still lucrative in the corona pandemic situation right now? I know guys are still, doing well, but out of everybody that I know, it seems like everybody is still, they are seeing a little slowdown in how fast the houses are moving, to be honest with you. So yes, we have, last time we checked, I think 26 deals under contract, this in escrow, but they're moving slower. All right, they're moving slower. Our spreads have been getting a little smaller, and that's why we've been having to use a little bit more creative finance. And the sellers are willing to work with us because they've been seeing a lot of other buyers, back out on their deals. But
yeah,
that's the truth.
So the buyers pool, especially the buyers that were using hard money, a lot of those guys are on ice right now for the most part.
Oh, what's the best book you guys recommend to learn creative finance? Also, what's the best way to find a mentor? I don't know a creative finance book. Buying Houses with No Cash or Credit by Peter Finkel or something like Conti or something like that. That's a pretty good book. Other than that, this is one of the things I would really advise you kind of learn from a mentor. It's worth it. Guys, both me and Chris went to college. I got a 4-year degree. It cost a lot more money than I paid a mentor. Originally in 2014, I paid a mentor $4,000. I was lucky I had somebody that had my best interest in mind. It has made me way more money than a 4-year degree.
I agree 100%.
If I could give my degree back, would you get that engineering degree? I know you got a lot for it, but
man, honestly, I was talking about this yesterday. When I got in the corporate job and I got out and I started getting into real estate and I started finding my mentors, that they were all our age that we are now, and they were millionaires. None of them went to college. Like none out of the 5 I had, none of them went to college, bro. So I would say, and this is gonna sting a little bit. This is what college does. It prepares you. It prepares you to go to work for somebody else, and it holds you back for 5 or 6 years because you're ambitious. Number one, you graduated from high school. Some of your friends didn't go to college. You went to college. You made it through. You graduated. Now you made it to the cream of the crop at the top. You got hired at the corporate job. You got the good money. Now the HR department is telling you, hey, you got the opportunity to be the CEO. You got an opportunity to be the fast track. You hear all these bad stories, but you're like, nah, that's not me. I'm gonna work hard. I'm gonna bust my ass. I'm gonna be the next.
Skin in the game, so it's hard to give it up.
Exactly.
So you spent 4 to 6 years to get the degree.
Yeah.
Now you feel like, bro, no, I can't let it go. I studied. I didn't spend all this money. I got these student loans. I gotta use this degree.
Gotta do it. Yeah, and it takes like 5 or 6 years before you realize this glass ceiling ain't moving. Yeah, man. Unless you're that chosen one, this glass ceiling is not moving. I mean, it's a company with 20,000 employees. There's only one CEO. You ain't gonna make it. Everybody's not gonna make it.
Don't get this wrong though, because look, we don't need these hate messages. We are not knocking the 9 to 5. I have one of the best jobs in the world. It's just that if you're talking wealth, if you're talking, wealth, financial success, 9 times out of 10, the 9 to 5 isn't gonna cut it. Now you can keep it, and you can, put something with it, right? You can keep it while you become an entrepreneur or business, but that alone.
Yeah, no, and it's not entrepreneurship ain't for everybody, bro. I mean, it's hard.
Yeah, it ain't easy.
It's hard. Some people, I know millionaires that do have a corporate job. They stack right, they live right, they invest on the side. You can still do it that way, but we were specifically addressing the question of, do you need the degree? And I'm like, no, you don't need it. You just have to have an extreme amount of hustle and ambition to do it without it, because you have nothing to fall back on. But I also do believe that the degree, if you had it, it may delay you a little bit in getting to where you want to go. But there's nothing wrong with that. Nothing wrong with that process.
Nothing wrong with the 9 to 5 or the degree.
Right.
Just know what you're getting into. No, don't have a blindfold over your eyes, because it's more to it. You want to look at it from a bird's eye view and understand it all. Is it a good time to house hack with the duplex? If it's a good deal, I would think. What you think, Chris?
Yeah. If it's a good deal, definitely. Just make sure you're not buying. You're not paying 100% of the market price in a market that's been trending up, because that's probably going to put you upside down for a little while if the market recedes at all. So,
right. What list should I look for subject to? I'm actually dropping a YouTube video. It's already recorded, edited in a probably within an hour on that. But pre-foreclosures, mortgage lates, expired listings, those are pretty good lists for that. All right, so Chris, I got one for you. Is there a way to start wholesaling when you don't have any money? Is that where hard money lender comes in? Well,
no, hard money lenders don't have anything to do with that. Unless you have a personal relationship with somebody that's gonna, maybe like a realtor that you can build a relationship with, and you have absolutely no money, and you're telling them, hey, send me some deals that aren't on MLS, or deals that you don't want to list, or you got a family member or a friend that knows somebody that has a property. That's about the only way you're gonna be able to have something fall in your lap for absolutely nothing. And don't expect that. I mean, nothing in life comes for free. Go ahead, Brian. I know you got some gems. I mean, deal machine stuff like that is cheap.
Man, I got it. Hey, because I promote it all the time, so I got to stick up for it, right? About starting with no money. Honestly, here's the truth. Here's the God honest truth. Can you start wholesaling with no money? Technically, yes. When I say no money, I'm not usually talking about $0. I'm usually talking about $500.
Right.
If you got $500, I guarantee you I can get you a deal if you're willing to hustle. Okay? Yeah. And this is $500 don't have nothing to do with the mentorship. You keep all your $500. Right? You put some gas in your car, you pay to skip trace some leads, right? Courthouse data is free $99. If I go to the courthouse, Fort Bend courthouse or Harris County, I can pull tax delinquent records, basically $99. I can pull probate records, $99. I can pull post-divorce records, $99. Code violations, $99, right? But now I have a list of all these people that possibly may be motivated. How much money did I spend? Technically $0. But what I got to do now? Well, now I have to reach out to them, okay? And so that's when you got to take that data and you use a skip trace service and find their phone numbers. After you got their phone numbers, now it's all about time. Just calling, getting better, making offers, and boom, you can do your first deal like that. Literally, I promise $500 or less, you can close your first deal. Now, if you want to make over $100,000 in a month, wholesaling real estate, now that's when you start to increase your marketing budget. And you start spending money on marketing. And of course, leverage. You need people to work for you. You can't.
Right. So the most important part of if you want to scale quickly, reinvest as much of that money as possible. Put it back into your business. Yeah. As
far as hard money, I would stay away from hard money until you become seasoned and know what you're doing. Because it could eat all of your profits like a monster, like really quick. So
it really can.
Since hard money lenders are skeptical, Chris, to lend money right now, what are some creative financial strategies you suggest in this climate? You could give them a couple. I can shoot a couple. Probably
it's all gonna be the same stuff. Anybody that's got cash sitting on the sideline, what I'm using right now for my deals now, guys, if you are not experienced, I do not suggest you take anybody else's money and gamble with their money. If you don't have the money on your own, you haven't figured out how to make money for yourself, don't take anybody else's personal money. But that's what I do now. I have people that have money in old 401ks from old companies. They roll it over to what's called a self-directed IRA, which is another retirement vehicle where you actually can select what you put the investments in. And so I have guys that are lending me money like that. Brian, go ahead. I know you got some stuff too.
Nah, shoot, you can continue. I was
okay.
I was gonna say along the same line.
Yeah. The other thing is, you're gonna a lot of deals you can tap the equity in the seller's home by doing what Brian teaches, by letting them owner finance it to you, right? So they're still gonna get their money, but they're gonna get it over time from you, and so that requires you not to have so much money up front to actually purchase the property. But go ahead.
Yeah, I love the fact that Chris Man, Chris gonna be my mentor when it comes to private money, right? That's one of the things, guys. You know, we gotta like put egos aside and like sometimes let the expert be the expert, right? And if somebody has been doing something for longer than you, it's kind of like let them do that. So when it comes to raising private money, but when we start doing a lot of that, you know, Chris is gonna be one of the sources. But I like what he said as far as don't take anybody else's money until you can responsibly manage your own.
Right.
I would put it in 3 tiers. Somebody asked the question, can I really start wholesaling with no money? And the honest truth, I don't care what no guru said, is technically yes. But when I say no money, I mean like under $500 and under, right? But to do a lot of deals consistently every month, you got to spend money on marketing. But I would say the phases, look, I would start to learn how to make money in real estate without money using wholesale subject to owner financing. And then I would start to make money in real estate using my own money, right? So now leveraging, you know, the resources you've gotten to make even more money. Now you're comfortable and you can successfully manage your own money on projects and be comfortable. Now it comes to the point where you start bringing in other people's money because it's levels to it. Even if you do $5 million a year in deals, you always hear the same thing from the very top of the chain. They need to bring and raise more capital because you can only have so much money. Even if you got $20 million, you're capped out. There's only so many deals you can do.
Right.
So it's always the last step, the pinnacle of where Chris is really like the crown when you start to raise other money, because no matter how much money you got, you're going to tap out. So no money, successfully manage your own money.
Yeah.
Raise private money.
There you go. Yeah.
That's how we do it.
That's it.
By not skipping steps, you develop the character, right? And the experience along the way. I
agree.
You know, that was kind of a little aha moment when I heard you talk about don't take the money first.
Yeah, man. I mean, seriously. I mean, there's some deals where I lost money on personally, where if I had to risk somebody else's money, I probably would be in jail, literally. And it's not out of ill will. It's just about me not knowing all the nuances of the deal I was getting into, and I had to learn that lesson the hard way. And had it been somebody else's money, man, that would have been a horrible situation to be in. You know, I can eat ramen noodles if I need to on my own. You know.
So, what do you think, Chris? Is it still a good time now to go for it and start wholesaling?
Yeah, I think it definitely is. I mean, anything can be done in any market, and like I said, there are. Let's see, the news makes us feel like everybody is really impacted significantly by what's going on. There are some people that are isolated from it to a certain degree or insulated from it where they can still operate at, 80%, 90% normal level. So there's still deals out there, like you said earlier. It's really going to be about learning from people like you who can show them how to find a cash buyers network of the people that still are in an equitable position. The people that won big in 2008 and they're excited right now about the opportunity to win big again. I think that, everything's calculated right now. It's not easy. But you have to have the right guidance around you to make the right moves.
How are hedge funds gonna act? I closed my first deal with them. I haven't had too much experience with hedge funds. I just closed one deal with them in like 2015. So I don't really have that experience with hedge funds.
Yeah, I mean, I know a few people that have dealt with them, but most of them aren't buying right now either. So, yeah, I don't know.
Let me see. Let's see. Smart. That's wonderful. Got a lot of good feedback from you guys. And drop a heart button if you guys liking this, or a flame button if you guys liking this. Yeah, drop a flame in the comments if we've shared anything that you can use.
Do us a favor, screenshot it and put it in your stories and tag us.
So let's see. What's the minimum amount of equity you acquire for an owner finance deal? Ooh. Guess what? I'm going out gunslinging. I know you like it's risky, but I'll take an owner finance deal with no equity if everything makes sense. Because if a seller owns their house free and clear, let's say it's $100,000 house, I would buy that house for, if the ARV is $100,000, they own that $100,000 house free and clear, I would buy it for $100,000, 0% interest. Principal only payments. Do the math. What's 100,000 divided by, I don't know, 180 payments? That's 10 years. I know it's low. Somebody do the math. Basically, what I'm saying is, if I bought a house for $100,000 and the ARV is $100,000, like, that's goofy, no equity. But if I could buy it with 0 interest, that house is basically going to be free and clear relatively soon.
Right. I got an example.
And you can't even get 0% interest if you had a perfect credit profile.
Right.
That's why creative finance is.
Yeah. So if anybody that follows me know that I'm doing a development in Fifth Ward right now, where I bought a whole block of property in 2013, owner finance. At the time, this Fifth Ward was the bloody nickel. There was prostitution, there was drugs on this block. The whole block was probably worth $300,000. The owner wanted the owner wanted $450 for it. I agreed to the deal because I knew that if this is a 30-year amortization and I'm agreeing to pay $450,000 for this whole block that's got views of downtown, eventually the equity is gonna surpass what I'm paying for it. Right now, that same block of property is worth $700,000. Imagine if I had walked away from that deal back then because it had no equity in it at that time. So it's all about understanding the upside potential, of what you're negotiating.
Real estate always goes up over time. Sometimes it's quicker than others. We see in some markets with gentrification, 8 months, 1 year. And sometimes it might take 5, 10, 15, 20 years. It just depends on your horizon and what you're looking for. Is this something you're looking for you, for next generations? Because one thing is a fact, God isn't making any more land.
Right.
So as time goes on, as far as the existence of Earth, things are going to, big fields of grass and trees that was just grass and trees are going to eventually become buildings at some point.
Yeah. And we didn't even talk about the cash flow, right? So zero equity, but good cash flow, that still could be a good deal,
Could be a great deal. Let us see. What would be a good list to market to in this current market? I would say absentee owner vacant. If somebody just has a property just sitting there and it's vacant, it's a higher possibility they can be motivated for a few reasons. If there's a mortgage on it, definitely, right? If it's free and clear, just the fact of, getting cash in their pocket during times of uncertainty. So I would definitely check out those absentee, so non-owner occupied, absentee vacant properties. Let me see. Dang, you bought all these people out, Chris.
Man, that's you, bro. Nah, man, it's mutual, bro. A lot of people were sharing it too. I appreciate everybody sharing. Yeah. No, man, I appreciate everybody sharing it too. We had a lot of people tag in and get the word out about this, so this is pretty good.
Thank y'all. Appreciate it.
Yeah.
Let's see. Let me see. No more. The market is changing every day. That's Portia, a realtor here in Houston. She's very active. She's always in the field. So that's good information. Market is changing every day. So just know what you're getting into. Do your research. FHA is becoming stricter on criteria. 640 and above is safe, I guess, to get you financing. Yeah.
Somebody says, does refinancing hurt the available home equity? No, it doesn't hurt your home equity. What you want to look at, what is it really costing you to refinance though? Like some mortgage companies will refinance you for free. Some of them may charge you $3 or $4 grand, to refinance. So then you have to figure out, does it make more sense for me to actually refinance? Is the interest rate significantly different? Are any of the fees different in my mortgage payment every month? Or does it just make more sense for me to take this $4,000 and drop it straight towards my principal, right? So if you got some change, you guys, just by paying an extra $100 a month on your mortgage, you can save a whole lot of money over a life of the mortgage. That's going straight towards the principal. Most people don't know, but if you take a 30-year mortgage that's at an average 4.5% interest rate, and you only make the average payments for 30 years, you will pay about 180% of the purchase value of that property. So if you bought that house for $250, by the time you make them payments for 30 years, you pay that back almost $375,000.
You're gonna buy it 2 times.
Yeah, you're gonna buy it almost 2 times. Yeah, literally. So
that's the beauty of lending money. So that's cool, In real estate, if you can get on the other side and you're lending the money, you see the upside of it, right? Why don't you guys do a school together? That's interesting.
Hey, nothing's on the table.
That's pretty cool. Good idea. What would you say to someone trying to get started in wholesaling? They just wait or focus on subject to? I would not just start off trying to do subject to deals. You definitely want to understand a transaction from start to finish. And although I said it's a very hard question when someone says, how do I get started in real estate? Honestly, wholesaling, the barrier to entry is so low, and it's such grind work that you're gonna learn just about everything, right?
Mm-hmm.
You're gonna learn just about everything. So I would say yes, it's always a good time to get started. Because the cool thing about this, when you're wholesaling, you don't have any risk or skin in the game.
Mm-hmm.
We're usually talking about a couple of dollars of earnest money and a contract. And as long as your contingencies are right, you're being honest with the seller knows what's going on, you're practicing good business and ethics, you don't have anything to lose. Subject to, you do it wrong, piss some people off, you get sued. I promise you'll get served with some papers.
Oh yeah.
Yeah, for sure. Let's see. Anything else? Look, we got 5 minutes to the hour. This is an amazing live, my man. Chris,
yeah,
can't wait till the city opens back up, man.
Yeah.
Start, packing it out with your engagements.
Yeah, man, we gotta do another event, bro. I know you had one lined up too that's gonna be fire, bro.
Houston is like the city of I don't know how to explain Houston, man. Like this nightlife and
Yeah.
But I got a feeling that those promoters, they're gonna make a killing when
when they open back up. Oh yeah.
Everybody coming back out. Hey,
yeah.
They probably make up for all the money that was lost during this.
Right.
Everything's gonna be booming. Restaurants, everything.
Right.
Let's see. There you go, Chris. How are you doing your numbers with potential ARV reductions in play when doing a rehab?
That's tough right now because you like I said, I think right now you're not even worried about so much selling it quickly because we don't know what's gonna happen with everything that's listed right now. I can pull ARV today, but if sales drop off in the next 2 or 3 weeks and people start taking less, my ARV is not gonna be worth anything. So I can give you a formula, but that formula really isn't accurate right now. It's a very wide open market where what they call volatile. It's going to be a lot of volatility going in. We don't know if the prices are going to drop, if they're going to stay where they are, they're going to go up. So I wouldn't blindly give you any guidance on that right now.
I like the honesty in that, Chris. So basically, he just said that the business model of buying and reselling is a risky business right now because of all of the unstable, things that's happening in the market. The comps are going to affect your ARV. People start taking less, so that probably would be a business model we'd probably just kind of chill on unless you just got a crazy deal. Or like Chris said, if you are in a position where, okay, it doesn't sell for what I want, I can just keep it.
Right, yeah.
Let's see. All right, so we got like 2 minutes. Rafael Vargas in here, man. Appreciate it, King. Thank you for pulling up.
What's up, man? What's up, man? I saw some heavy. I saw Carlos in here. I saw Tony in here, man. Aunt Pam. I've seen a bunch of
big
people.
Boys, man.
Yeah.
I respect all those cats a lot, man.
Yeah, bro.
But we got 1 minute and 45 seconds left. Do you have any parting words for him, Chris?
Man, I'm just gonna plug my crowdfund, man. So buytheblock.com, $250 you can invest. I bought a $1.3 million real estate portfolio right next to a big mixed-use development coming in Houston. If you guys want to figure out how you take a little bit of money, invest it in something, and let it grow, the land values alone is going to appreciate. It's a great project. Just check it out on my page later. Go to my link in my bio. I also have a membership program in there where you can learn stuff, $37 a month. They're just self-promotion a little bit. Go ahead, Brian. I know you got
it. Man, you need it. I recommend everybody invest into the project, man, and have a piece of that ownership. Right, with a piece of that ownership, and Chris is a well-respected guy out here. So anything that he's invested himself, promotes, you could believe is good because it's not just profit with him. That was one of the first things I noticed about him. It's like making sure it's right. We do right by people before the bag. Right. Some people do anything for some money.
Right. So, appreciate that, bro.
Other than that, guys. You guys can check out my website in my bio, brianiregbu.com. Got some nice resources in there. Other than that, you guys stay safe. Thanks for joining. Y'all wash your hands and all that other COVID stuff.
All that.
Don't take too many risks. Make safe investments. Peace out.
All right, bro.